Hello traders, the title of the video is how to count Elliott waves by admiring the price action. Alright, so you may say, George, what kind of title is this? Alright, if we are using the Elliott wave theory or principle, we must always keep our eyes on the price. So I have come across a very interesting scenario that I want to share with you. So you may say to me, George, it's the same thing, I don't want to know more, but I have it here, very interesting scenario here. That's why I want to share it with you so you also may learn from it. What I want to do, I want to ask you for 30 seconds, all right, to look at the chart and just concentrate on the price and try to find out, try to see if there is something happening here. Try to look at the chart, not just stare at it, but just to recognize a pattern, a scenario, something that is constant on this chart. Now, as an Elliott wave trader, sometimes those price action, those pattern will help you, okay, to improve your wave count. Not only that, and to forecast the market accurately. And this is a very, very interesting scenario. And I'll give you 30 seconds to admire the chart and to tell me in the comment section if you have discovered what I have already found myself. Your time is starting now. 30 seconds. This is a very nice exercise for you. So I'm just going to keep quiet a bit, and when the time is up, 30 seconds, just the price, not the indicator. Look at the price, the structure, and what you find, let me know in the comment section. Few seconds left. Got 10 seconds left. Time is coming to the end, my friend. Time's up. All right. Now, have you noticed something? All right, so we're going to go to it. I will tell you in a minute. It's not a secret. So you can see here, looking at this chart, the financial instrument that we are analyzing is air products and chemicals. So basic material sector. The epic is Alpha Papa Delta, APD. All right. So I've done my homework already to save time, so this is my first wave, so feel free to disagree with my wave count and compare your wave count to mine and stick to the one that you like, okay? So this is the second wave, just so you see here, it came down. I hope I have enough data. I hope it's clear what I'm looking at here. So that's the second wave there, and then we have the third wave up to this point. All right, somewhere there, all right, and then we have the fourth wave here. Now, the fourth wave here is a flat correction. You can see the price came down, and then went up 1, 2, 3, a little bit above the third wave, all right, before coming down. So it's quite a mess. So because it's a fourth wave of a higher degree, it's quite deep, a little bit deep, all right. You can see a little bit deep here, because in fact the price was going up since 84 to 98. That's a long time. So long-term investor took profit forming the fourth wave here, and now we have, okay, the fifth wave. This is the fifth wave right there, and again we have a flat correction here, 1, 2, 3. So you see it came down, went up. If you look carefully, just went a little bit above the fifth wave, just a little bit, almost equal. All right, then it came down again here. Now what is this section here? So this is a correction. So after the multi-way, so we place a vertical line there. I'm going to tell you soon what I have found by admiring the chart itself. All right. So now, so let me have a correction. Take it. So what's this section here? So what can we say after the multi-way? What can you say after the multi-way here? All right. If you continue to count the way, you will say, you will level this one here, 1, 2, 3, 4, 5 becomes one of a higher degree. Yes or no? All right. That's what you need to do, so you know get confused as the price continue to go up, otherwise you get lost. You don't know where you are. Again, if we count, you see the black one, if you go for the black one again, you get 1. So the black one, this will become, all right, somewhere 2. All right, 2 black. But understand that the correction may not be finished yet. So the question we are asking, is this move a new trend, or is it just a portion of a complex second wave of a higher degree, talking about the black one here? All right? So we make the price may form W, X, Y wave, making the second wave a W, X, Y wave, a prolonged complex correction. Or the second wave may be just this. Right? So we may say probably this is a new trend that has started in 2009. All right, we will see. But as we are counting wave, the wave count is not static. It's dynamic. If you set your mind like this is the wave count, that's the way it should be. It should be exact, accurate. Yes, it should be accurate. It should be specific. But then be flexible yourself and know that the price is forming a bigger cycle, and you want to add additional information to what you have already gathered. So talking about admiring the price action, what have you found? If you look carefully here, look at my second wave. It came down very sharp. Was it sharp here? You see here? One candlestick bar down, pew. For me, it's sharp. You see here? It came down fast. Look at the volatility again here. The price came down. Look at the C wave of that flat correction. Right? So anytime we see a correction for this, it's happening to be a little bit fast. You see, it's a fast correction. We may say sharp or fast correction for these financial instruments. Look at this one. After the fifth wave, look at that. Down. All right? You see what's happening? Now, as I was telling you, the Elliott wave count is not static. It's dynamic. So as the price came here, people were thinking of what? A flat correction. They were thinking of flat correction. So they will say, this is the A part of the flat correction. They will say 1, 2, 3. So this 1 become this 1. What I call it 1 here is 1, 2, 3. They say 1, 2, 3. So the price was at 138.2% Fibonacci extension level of the whole trending phase. So they were expecting, all right, an expanded flat correction. But as they were expecting, look the way the price came down here, fast. This is why I want to say to you, admiring the price. Those are fractal patterns. So when you are counting wave, try to also look at it like an eagle to see a pattern. Is a pattern in place? Because financial instruments, very often we have a characteristic. And you want to find out about those characteristics. Look at the fourth wave. The fourth wave also brings the price to the moving average 100, almost to the moving at 200. Look, this is the moving at 200 here. Almost to the moving at 200. Look at the correction phase. Again, to the moving at 100 and to the 200. It's a pattern. Look at here. If you extend this red line all the way here, you can see that it will touch the moving at 100. So it is a pattern. So by admiring the price, by looking at what the price is doing constantly, a stable data that's appearing on the price structure can also help you to predict what is likely to take place. Now, you have to look carefully again here. Look at the price action again, admiring the price action. You can see that the flat correction went a little bit above, or a little bit above the third wave. Here, almost a little bit here, you see this move upward a little bit above the high of the first wave. Look again. Those are patterns that you want to watch carefully because it can help you. Here again, this one went a little bit above the third wave. That's what I was telling you. Again here, the price, you see, all the time there's a little bit move, a kind of a double top, a little bit, just a little bit above. Now, look carefully. What the professional did notice that. Some trading software did notice that repeatable pattern, that fractal pattern. Again here, as the price form, look carefully. That's what I'm saying to you. Admire the price. See here, when we were here, the flat correction, people were expecting a flat correction. So they were expecting to form the C wave, 1, 2, 3, you see. Even as it came down, they say, 1, people try to sell it here to say 2, and then 3, 4, 5, and the price escape. That's what we are saying. your forecast will be at your side, but you will concentrate on the price. That's why sometimes people say, oh, your wave count is wrong, your forecast is wrong. No, the forecast is not wrong. The price is right. The forecast is following the price. You see, the price is always right. So we will take the forecast and use it in conjunction with what the price is doing. Did the price confirm the forecast? If no, put it aside. Don't force it. So now, if you try to impose your forecast or your wave count to the price, you will be frustrated, and you don't want that. Okay. So again here, because of that pattern, a kind of a double top price going a little bit above, as the price came here, you see this high here, it went a little bit above this high here. You see, people try to sell it. You see, the reason why people want to sell it here, if I was here, I would try to sell it also. You see, people try to sell it here because of that pattern, price going a little bit above the previous high, going on. This is happening all the time here. You see, almost it's doing it all the time. And I can assure you, if the price start going down again here, we can forecast that. If it start going down, now you see going up a bit. If it start going up again, they will try to push it down very, very fast, like it did here. Very, very fast, very, very fast, very, very fast. Does it mean that definitely this is what's going to happen? No, it doesn't mean that. But we have observed something that is taking place, that is happening. It's a behavior, it's a kind of habit for this financial instrument, air product and chemical, and American stock. All right, that information can help us to be prepared. All right, so when we are prepared, we have an edge. That's the advantage of being prepared. So you're expecting something, and when it's happening, you will handle it more carefully. But if you are not expecting it, and suddenly it starts going down very, very fast, when you buy here or something like that, you will be shocked. So to cancel the shocking effect, all right, we can admire the price, but not just stare at it, but we want to gather the information that the price action is telling us. All right? So this is about how to count Elliott wave by admiring the price action. So professional trader, Elliott wave trader that spotted this pattern, down, fast move down. Here they saw it, you see. they were expecting a sharp move down. And also to the 100, as I told you, almost to the 200. And they did exactly that here. And then from there they take it up again. Here, they were expecting a flat correction again. As we had a flat correction here, you see, again, a flat correction here. You may say a flat, wow, it's a double retracement here and down. A double retracement, down. Yes or no? Here again, people were expecting, again, all right, a flat correction, an expanded flat correction at 138.2. Now they know that the move should be down fast, and they push it down. Volatile. If they want to bring it down, they will try to push it down very fast. If they push it too far, you will try to find the first support near 100 and 200. Those are just observation. This is no magic formula. It's just keeping your eyes open, try to see what's happening. Is there a characteristic for this financial instrument? Is it a pattern repeating itself? Is it a fractal pattern? All right? Can we work with that? Can it help us? If it can help us, then good. So yesterday, I also posted a video that two people marked down, by the way, which is correct. I mean, if you like it, okay, thumbs up. If you dislike it, mark it down. People mark it down. But I did not see any comment because I would prefer also when people mark it down, they can put something down. Then, okay, that can help us to improve our video. But I understand to people. But the video was about how to use, the title of that video was how to detect the Elliott wave corrective phase using the moving at 50. It's a powerful information that we share with traders. Now, I mentioned it before in some of the video. As you can see here, I was telling traders in that video, you can see that the multi-way has ended here. How that information, knowing that, okay, when the price, after 1, 2, 3, 4, 5, every impulse wave, you see, a third wave is an impulse wave. The correction push it down below 50, and it will bring it to 50. It will try to retest 100, and Sometimes it will come back and retest the 200, and from there it will start another impulse wave. That's why the moving at 200 is so important. That's why, apart from the price, the moving averages are powerful. I mean, it's powerful. I saw professional traders chart, and I see what they have on their chart. Pitchfork 2 and moving averages. Shocking, isn't it? Now, okay. Now, again here, look, correction has started after an impulse wave, in this case, the whole multi wave. All right. Here again, first wave as an impulse wave, correction, bring it below the 50. I'm not saying that every correction will bring the price below the moving at 50. But when the price, after a multi-wave, if the price dip below the moving at 50, the first thing that should come into our mind, flick, is that, probably this is a corrective wave. That's all. It can be a WSY wave, it can be a triangle, it can be a complex corrective wave, it can be A, B, C, D, E. But that's the first indication to her that probably that move that brings the price below the moving 50 is a portion or a section of probably a bigger correction, or that is the corrective wave itself. And look at that. After the multi-wave, this is something professional know. They are watching it. You bring it below the 50. The people will try to sell below 50, pushing it to the 100. If it dip below the 100, they will try to push it to the 200. Look at that. Is this something Elliott wave traders should know? And sometimes they probably touch the 200, and then from there, it will just run away. Talking about admiring the price is about knowing the characteristic of each financial instrument. This financial instrument that we are talking about, air product, seems to find a support when it reaches the 200. Here, it almost comes near the 200, which means the investors that are trading or investing in this company love this stock anytime it reaches the 200 level. Boom, it's a habit. In fact, when we are talking about the characteristic of the financial instrument or a fractal pattern, we are in fact digging out the trading gene of those traders and investors that are participating in that security. That's all. This is what they are doing. So they are buying near the 200. Boom, here. They love it near the 200. It's a pattern. So I hope I have said enough, that you will find it fully useful, that it will help you to become a better Elliott wave trader. So this will conclude our discussion today about how to count Elliott wave by admiring the price action. The financial instrument that we were analyzing today is air products and chemical, Epic Alpha Papa Delta. This is an American stock. I was analyzing this stock on the monthly chart. To wrap it up, let's go to the yearly chart, and you will see what is happening there. Here we are on the yearly chart. All right. So you see, if you're on the yearly chart, you say probably first wave. So that will be the black one, not the red numbers. And you will say this is the second wave. But now, be careful. You are saying second wave. That's what we are saying. The wave count is not set in a stone. All right. We are counting wave, but we want to follow the price. So today we will say second wave of higher degree, but tomorrow the price may tell us and say, George, why you are expecting to be the third wave of a higher degree is just an X. So we come back and say this is a W, and this is X, and this is Y, probably complex correction. Or we may come back and say, well, it's true. The second wave has ended here, and the price continue to exit, to continue to go out. And we say, all right, it's now the third wave. All right? So the question mark that we can put on this, all right, which I doubt myself, I put it there. And then I will put a question mark on it because it's not convincing to me. All right. So I'll put a big question mark on that one there. All right. So if this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial that can help other Elliott Wave traders, feel free to share with your friend on Tumblr, Google Plus, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. If you have not yet subscribed to our channel, please subscribe to our channel. It is free. And click on the notification bell. So anytime we record a new video, you will be the first person to be notified. Happy trading to you all. And I will speak to you soon. We are the STW24 traders. Talking about how to count Elliott waves by admiring the price action. If you want to know more about fractals trading, go to www.dayprotrader.com to master fractal pattern trading. This is a predictive fractal pattern trading. We'll do the same thing in the zone near the media line between the two Fibonacci key level, a video that I posted at Daypro, between the 200 and the 161.8% level. That's where we are, the media line, Fibonacci media line. Okay, here we are now. Is he going to do the same thing like before, or will he break a bullish? So priority to bullish signal above that level, and priority to bearish signal below it, using a top-down trading method. Draw. Now that we have finished with our Elliott wave count, all right, just for traders that are trading with financial instrument, okay, just to help those traders, you will put a pitchfork tool on your chart like this, which is a nice setup. That's the pitchfork tool there. You can see that the price breaks above the pitchfork tool, all right. So this is additional information that I want to add to those American traders or traders out there that are trading. So then we draw a line that is parallel. That we are doing is a market geometry, drawing a line that is parallel, okay, to our original pitchfork tool in the direction of the price. Must be parallel, almost, okay. And also we want to make sure we draw the media line of our new channel, okay. Here it is, something like that. Look at that, beautiful. So what is happening here? The price breaks above the media line of the projected pitchfork tool, and we're retesting it here. All right. But as I told you in that video that I posted at Daypro Traders YouTube channel, I know some traders that are following us at 24 Elliott Wave and also at dayprotrader.com. I know those traders, so they know what I'm discussing here. If you have not yet subscribed to Daypro Traders, check it out, because you must master Fibonacci and together with Elliott wave is very important. So now the media line between two Fibonacci key level. So this is it. Right? That's where we are now. Right? Now the price also breaks above the media line of the projection. Was retesting here. So you can see there's a resistance squeeze there, squeeze there. All right. One step at a time, and as always, draw your common center line. If you are itching to sell, break below, retest, turn around. That will be a nice scenario. Or if you are speculating, know exactly what you are doing. All right. So continue to draw your line. All right. Draw your line. Don't be afraid to draw lines on your own chart at the corner in this point and those high there. Okay. And we can say it's squeeze in that kind of a triangle there. You get what I'm doing now? So this is it. That's what I'm saying. After the wave count, what do? We switch our attention to the price. That's what I'm doing now. We just now concentrate on the price, draw a line, use pitchfork tool, use market geometry. That's what I'm doing now. That's what you have to do all the time. All right? Happy trading to you all, and I will speak to you soon. We are the STW24 traders, talking about how to count Elliott wave by admiring the price action. Thank you for watching.